What the heck is a half session? Let's talk about it today on the weekly update. Okay, friends, let's learn something new on the channel today and talk about a new word, a half session. Here's what you need to know. Corporate results are painting a picture of a tapped out consumer as quarter two earnings season looms. Now, this is something that I've been talking about consumer weakness for a little bit now, but we're continuing to see pain on the consumer side of things. And so it's created this idea of this thing called a half session. Here's what I mean by that. Basically, there are people that are thriving in this economy. That's primarily asset owners. And then there are people who are struggling in this economy. And those tend to be people without assets. And so it's creating this idea of a half session. Here's one way to see it. Here's the excess pandemic savings. We heard a lot about this during the pandemic. If you'll remember, the government was sort of like giving cash away, forcing money into everybody's pocket. You can see here, we peaked out something like over 2 trillion of excess American savings, excess US savings relative to the pre-pandemic trend. And then we entered this period, as we started to move on from 2021, we entered into this period where people started to spend down their excess pandemic savings. Inflation started to get really high. People, generally don't reduce their lifestyle. They try and keep it going as long as they possibly can. And this sort of culminated in 2024, where we are today, where we actually have consumers with less savings than they did pre-pandemic. Now, this is amazing to me because the stock market is at all-time highs, your home value is probably at all-time highs, and interest rates are extremely high. So if all you did was took this excess pandemic savings and spent what you made, you should have 5% interest on this number. This should be a line going up. But what has happened is American consumers have spent, not only have they spent everything that the government gave them, they are now in a worse financial picture today, right now, than they were pre-pandemic. And so this is what creates this idea of this half session. If you own stocks, if you own a house, if you own businesses, you're doing great right now. If you don't own any of those things, if you're a worker, if you're a renter, etc., you have probably spent through everything that the government gave you to respond to the COVID-19 emergency, and you're actually probably worse off financially than you were pre-pandemic. And what this is doing is this is drastically altering spending trends. This massive list that I'm showing you here. This was just yesterday, and this was stocks hitting new 52-week lows at some point yesterday. Now, what is a 52-week low? It just means it's the lowest point of the last year. And that's pretty amazing, right? Because the stock market is at all-time highs as we sit right now. And so what we're seeing is these are stocks that are not following the rest of the market, that are dropping out of the market, and are actually at a pretty terrible spot. 52-week lows are very painful places to be. And what's interesting is if you look at this list, this isn't just some small niche businesses. Of course, there's some small guys in here as well, but these are actually, there's a lot of really big businesses on this list now. Global businesses, multinational businesses. Right here at the top, McDonald's, Nike, Lululemon, John Deere, Las Vegas Sands, right? Like just that list alone, just these big boys at the top, these are some of the best businesses, some of the best business models. They have all the data. They have some of the best executives. They have the best talent pools. They have, the best business processes, the best real estate, all of that. And their stocks are just, in trouble right now. And I think a large amount of it has to do with demand. Because we're in a half session, the other half of the economy that doesn't own assets, they're struggling right now. And the way that they respond to that struggle is by cutting back on their spending. Spending on what? Things like Nike shoes, things like McDonald's hamburgers, things like trips to Vegas. John Deere is a little bit a different one. But as you go down this list, Walgreens, right? We know the pain that Walgreens is having. Five Below, which is a retailer primarily to the younger cohort. I think that's interesting to show that it's, the young aspects of the economy maybe not be doing as well. Mattel, parents, toys, games. Paycom, payroll services. Pool corp, people putting in pools. So here's homeowners, which is actually the other side of the half session. Bloomin' Brands, there's actually quite a few restaurants here, right? McDonald's, Bloomin' Brands, which we know here in Tampa, Outback Steakhouse and the like, Papa John's Pizza, Wendy's. We're actually starting to see maybe some shattering of what was called the restaurant bubble. When things get tough, one of the first things that you cut is going out to eat. And so what's interesting is if you look at this list, there is a growing list of global multinational businesses that are not following the stock market higher. And one of the reasons why I think this is happening is because we're in a little bit of a half session, I would call it. Now, all of this was based off of quarter one earnings, and things have been pretty placid up until the 4th of July holiday. I'm expecting that the market is going to get a little bit more dynamic because we're starting to enter into quarter two earnings season. And so if we started to feel a little bit of the effects of a weakening consumer in quarter one, I'll bet you that those effects get a lot stronger in quarter two. And so if you look here, what I'm showing you here is this is the number of earnings reports by day. And so basically from where we are today right now through to the end of the month, we're going to see a peak in earnings reports for the second quarter. And one of the things that I'm going to be watching very closely is let's see what the state of the consumer is. I want to know about demand from a lot of these businesses. So what does it all mean? Are we in a half session? I think so. We'll see when we get quarter two earnings, then I'll be able to maybe more definitively say where we are. But here's what a half session means. Consumer stocks are starting to get hit as the consumer weakens. That's normal. That's what we would expect from raising interest rates. We might be in a half session. It's a might for right now. This damage, the consumer damage, was visible in quarter one 2024 earnings, and quarter two 2024 earnings are about to start. What does that mean? Well, that means I'm expecting some fireworks. Remember always, though, that a lot of the things that we talk about on the channel, we talk about the economy. That's what this presentation has been about. Remember that the stock market is not the economy. They influence each other around earnings season, but they're not perfect comparables. And so if you look at the stock market, the biggest stocks in the stock market right now are the Magnificent Seven, and those guys find a way to make money come rain, snow, or shine. So I actually don't know how much this really matters to the broader market, but what I think it does matter to are these smaller, maybe not smaller stocks, McDonald's certainly isn't small, but these stocks that are outside of the big boys in the index. However, the positive from being into a half session is the state of the U.S. consumer helps solidify my view that we're going to see rate cuts later this year, right? One of the things that we're clearly seeing right now is demand is being impacted. I think Jay Powell is going to deliver rate cuts, and I think they're going to come pretty strongly because the consumer and the economy need it. So there you go. Are we in a half session? Maybe. We'll see as we get through to the end of this month. We'll know a lot better about the state of the consumer, the economy, and how the market's going to look through till the end of the year. I'm not worried about the S&P 500 from these developments. The big boys at the top always do well, but this is interesting for the economy more broadly and a lot of different smaller businesses. So there you go. There's the news review. I'll see you this weekend for a markets review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.